Okay, now if they ask you dividend payout policy, or they can say dividend payout rate. I normally want to do it that way, and then this means this is your earnings per share, this is your dividend per share, this is your retained income. So you must know that earnings per share minus dividend per share give you retained income. Okay, so what we are saying is that when the business makes a profit, they will have to distribute a part of the profit in the form of dividends to the shareholders, and whatever remains after the distribution of dividends is retained income. So if you to calculate dividend payout policy, it's calculated by saying DPS over EPS times 100. I'm just going to use simple examples here so that you understand what I'm saying. Let's say the dividend per share is 50 cents, and then the earnings per share 100 times 100. This will give me 50%. What this 50% means is that 50% was distributed as a dividend, and then 50% is going to be retained income. So in other words, out of the profit that was made, the business paid 50% of the profit as dividend to the shareholders, and then they retained 50% for future use. Let's say you calculate your dividend payout rate, and then you find that it's 70%. If you find 70%, it means 70% was paid in the form of dividend, and then automatically it means 30% is what has been retained. Right? You can have a scenario where you calculate dividend payout ratio and you discover that maybe you get 105. Right? 105 paid as dividend. If you get 105, it means the business distributed all the profit that was made in the year, and also took another 5% from profits of previous years. In this case, nothing was retained. So you can have different scenarios here with your dividend payout ratio. You can have scenarios where a part of the earnings is distributed in the form of dividend, which could be 40%, 30%, 50%, 70%, and something is retained to be used in future. Or you can have a scenario where the business distributes all the dividend that was, or all the profit that was made, and actually more, which means in this case they've distributed all the earnings for the year, and then they also got earnings from previous years to also help fund that dividend. Where can you get that kind of scenario? Let's say your earnings are 80 cents, and then you pay a dividend of 100. Automatically, in this case, it means you're distributing everything that you earned. So you earned 80, you distributed 100. Meaning to say all this 80 has been distributed, and another 20 is obtained from the previous years. Okay, now I want us to go further with this to explain what is the implication of this. So, further to this, they can ask you whether it was a good or a bad idea to distribute all the profit, right? So, if you pay dividend, the advantage is one, you attract investors, right? If you retain income, you use for future use. So which means in future, if you need to do something, you do not need to borrow any funds. So each of these scenarios has its advantage and disadvantage. Now, it's an advantage that you attract investors, right? But the disadvantage, I can take it directly from retained income. You use for future use, or for future, let me say, instead of saying future use, let me say future expansion. So you can use it for future expansion. So I can take this and make it a disadvantage. If I pay dividend, it means I may need to borrow. to expand. And when you borrow, we already know that from our risk that you increase the risk of paying more interest. So the advantage of paying dividend is that you attract investors, but in future, if you want to expand, you might need to borrow, which brings interest risk. Now, the advantage of retaining income is that you can use for future expansion and you avoid borrowing, but the disadvantage is that you may lose what? You may lose investors, short-term investors that would want to make a lot of money, or that are speculative and want to make a lot of money now. So whether you pay dividend or you retain income, it is its advantage and its disadvantage. So how you respond depends with which angle you want to take. Because if the business paid dividend, you can say it's a good thing because you're saying they're attracting, but you can also say it's a bad thing because you can say they will need to borrow in future. If the business retained income, you can say it's a good thing because they're going to use it for future expansion. Or you can say in the process of doing so, they're going to lose short-term investors because of people that want to get something out of that. That's how you comment on this one.